Hey guys, welcome to this video. In this one, I'm just going to run down a little bit more in detail, basically how you want to have a correct perspective, if you like, on various different assets you're trading. Mainly today, we're going to talk about the euro against the US dollar. As many of you will know who follow me, watch my streams, everything like this, we looked short as it came higher up. You saw that move nicely up to some fairly key resistance, 110, 300. And quickly saw a move down after. So we're going to run down why that happens and a little bit of something quite interesting that I think most people haven't quite considered. So to the latter part of this video, I'll give you my idea of what I think based on technical and fundamental analysis. And on top of that, of course, if you want to get started, go under this video. It's absolutely free and get started today. So let's go ahead and just assess what we saw. So I'm going to take this from a perspective that I believe everyone should know. When they come into trading, when they're looking to trade, you have to know things like this, or it's just going to be hard. So once the market comes down here, okay, so we had this massive fall, euro weakness, dollar strength. We all know about it. It went on for ages and ages and ages and ages, okay, as the global economy suffered. Now, if I just pull my if I just block off the end here, you can see that this red line here and this green line represents your 200 and 100 MA. In other words, they keep track of the long-term price market. And the further away from those you are, it's likely the more extreme price is. And you can see that these rest around 113 and we went to 0.95. So an enormous way off. So price is really low. Now, what happens after these massive falls? As I said many times, and we called it long down here, the market changes and it starts to come up. So as soon as I start to move this along, you can see we've already come up past these early moving averages here, your 20 and your 40. Okay, they normally track trends quite well, but we've come up above them now. So if I keep going along, eventually you'll find that we get to that 100 MA, nearing that 200 MA. So our first job is to decide, okay, do we want to buy it? Now, the answer is no. And that's because you've come up for 16 weeks, something like that. You were way far off those MAs and you've returned. So the price is getting considerably higher within this period of time. It's not as high as it was, but it's got high and it's gone up with hardly any red candles. You can see there's 2, 3, okay, basically 2 before the market turns. And the majority of the other ones, the vast majority, are green. So the market comes up and up and up. And there's people who say to me, Will, why don't you buy after it's come up? And the answer is because I'm a trader and traders don't do that. Now, this is the perspective I'm taking in this video. If you come off the computer now, you stop trading on here now, and you go out and you're looking to buy something, when do you ever buy it after the price has gone up happily? You don't. You will, if your hand's forced and you're extremely desperate for something and you've got to pay the price and you can't go without, you'll do it. Okay? But when you've got the option to not buy it at a high price, you don't do it. You don't go and buy something for more than you're willing to pay for it outside. But then when you come into TradingView or you come onto the markets, suddenly that goes out the window. And people say, why don't you buy it up here? Why don't you buy it when the price is extremely high and you're getting a terrible deal? And the simple answer is that's a stupid idea because it's not what people do. So just remember that, if this was a car you bought or a car you were looking to buy, and instead of euro against the US dollar, this was car against the US dollar. So Mercedes against the US dollar, your car, you would like it down here after this down move. You'd say, yeah, you know what, I'd like to buy it now, but you wouldn't buy it after it's come up, okay? Because you're not getting a good price. So don't FOMO in. Now, having said that, we looked short here because we were able to look back. Okay, so we knew the price was high. We knew, okay, eventually it's going to have to fall. And when it does fall, it's probably going to be quite ferocious because we've already had a big move. And you're seeing that already, okay? 300 pips or so slam down. Now, if I look to the left, you can see all around here is mounting resistance. And eventually that's going to cause a problem for price when it returns because the market has memory and sellers know that's where they want to come in. Okay, the larger money, the mass market. So they did. And that's why you scale into the market. You're not looking for a pinpoint price. You're looking to slowly and slowly accumulate short positions so that when you're in the market overall, you've got a good price and you're in before the move. You're not buying the car after it's come up. You're selling the car at a high price. You're getting in before the price comes down, because again, that's all people do in real life. If they're looking to invest their money in anything, if they want to buy a house and the market's high, they won't buy it. Okay, this could be house against the US dollar. Okay, or it could be anything that you need, computer against the US dollar. If things cost more, people don't buy them. So why do it when you come onto TradingView? You come onto your broker, MT4, whatever it is, your platform, and you do it there. You just won't. You just shouldn't do it. So anyway, this is kill zone because the price comes up enormously. It's high. You're hitting those key MAs. Your brain should say automatically, "I want to sell." That is a sell straight away. Open up the chart, sell. That's not a buy. So now you do have that dragging down move, and it's coming on to these early moving averages. Now remember I said they track the trend fairly well. This is going to constitute an early light buy. And the reason why it's an early light buy is because, as I said, you're tracking the trend, but the 20 and 40 MAs keep basic track of close time frames, if you like, or close market falls. So it's not showing you a massive fall, but it is showing you a light fall. And that will go on. And as you can see, as the market trends, it does, but eventually it falls through. And that is where people get burned. Okay. You can see that here, down here. You can see the market eventually decides to go whack through the MAs again. Okay, just around there. So a lot of people would have been burnt there because they're selling low. Okay, they're selling after the moves come down. That's not a good idea. So looking now, I like it lightly long on this 40 MA. You're coming to this early support here. Wouldn't be surprised if you see a bounce and the price gets caught temporarily about 107, about 108, I would say. Okay, you can drop to your lower time frames for that. Anything around here, you'll probably see the price get stuck temporarily, maybe just over 108. Okay, that is ideal. So if you get down here and you come back, you've probably got 30 or 40 pips in it at least. On the sell side, if the market does return, I've just seen it fall away before, I'll look to lightly short again. Okay, you might find this beats the high slightly, gets nearer to 111, but as long as you're scaling in with small light positions, it's not going to matter because you're scaling and you're getting a good price. So remember, don't buy things high, don't sell them low. You want to sell high before the market turns, buy low before the market turns as well, and you'll stay on the safe side. Thanks for watching, guys. Check out my videos underneath here and my profile. Get on board today and start trading with myself. See you in the next one, guys. Thank you.